Senior U.S. officials are set to visit China this week in an effort to bolster relations amid simmering trade tensions. This is as China's Huawei Technologies is reportedly readying a new chip that will challenge Nvidia. That's according to the Wall Street Journal, a sign that U.S. obstacles have failed to limit Chinese companies' abilities to keep pace with U.S. tech. Joining us now, Chris Miller, Tufts Assistant Professor of International History and author of Chip War, the fight for the world's most critical technology. So, Chris, another update in the chip war as far as U.S. versus China today with the news of Huawei building that chip. I'd be curious just sort of your takeaway here, what it means for U.S. chip companies in China to have Huawei building this product right now.
Well, I would say, first off, we don't know much about the details of this new Huawei chip. So how good it will actually be, how many will actually be produced. We're going to have to wait and see. And a lot really does depend on those details. But I think we shouldn't be surprised that Huawei is trying to build newer and better chips, given that the Chinese government has anointed Huawei as the country's chip champion, given it all the resources that it needs to try to catch up to Western leaders in chip production like Nvidia.
In a world where artificial intelligence isn't just a buzzword but a driving force of innovation, Nvidia is making headlines once again. The new Blackwell-based GB200 AI servers are reportedly facing significant setbacks, pushing market demands to new highs and leaving investors and tech enthusiasts alike in suspense. What exactly happened with these servers that everyone in Silicon Valley, including giants like Foxconn, can't stop talking about? Let's dive in. Welcome to the world of high-stakes technology where Nvidia, the reigning leader of AI hardware, finds itself grappling with unexpected dilemmas. Component shortages, liquid cooling failures, and design flaws in their Blackwell AI GPUs? The stock market is abuzz, and it's time to get to the core of this unfolding drama. But first, if you want to keep up with the latest updates of companies like Nvidia and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Chris, we're sort of awaiting economic policy details from Kamala Harris and that campaign. We have a general idea of what we're getting in former President Trump. What are your key questions for Harris when it comes to U.S.-China trade?
Well, I think the key question is, will she pursue a different policy from the Biden administration or something really quite similar? When it comes to chip issues and technology competition with China, the reality is that there's been a lot of similarity between what the Biden administration has done and what the Trump administration did when it was in power. And I don't think it's likely that Harris would meaningfully shift from any of those positions, whether it's about subsidizing domestic manufacturing or trying to limit technology transfer to China. Both of those policies have bipartisan support, and they've persisted across multiple administrations. And so I think it's fair to assume that a potential future President Harris would do something broadly similar.
Nvidia's next-gen GB200 AI servers were all set to be the crown jewel of AI innovations, promising unparalleled computational power and efficiency. However, it seems that the promising apple has hit a few worms. The Taiwan Economic Daily reveals that Nvidia's servers are suffering from component shortages, a significant blow considering the AI market's insatiable appetite for advanced processing power. The kicker? These shortages are only part of the problem. Reports of water leakage stemming from the liquid cooling systems have also surfaced, making the situation tantamount to the Titanic's iceberg moment. Taiwanese manufacturers, in a scramble, are deploying all hands on deck to rectify this critical issue, with local suppliers stepping in to salvage what could otherwise be catastrophic delays. As if that wasn't enough, another bombshell drops. Major design issues with the Blackwell AI GPUs necessitate a complete redesign into the B200A model. It appears that not all is smooth sailing for Nvidia, even with industry heavyweights like Foxconn holding 40 to 50% of the production contract. The glimmer of hope lies in Foxconn's ability to churn out a public version of the GB200 AI servers by year-end, while the rest of the market may have to wait until 2025. And what is worse than running out of components? The answer to this is dramatic. Hello everyone, and welcome back to Investocracy.
And Chris, we've been talking about China here, and I'm curious about the Taiwan risk, knowing that a lot of the AI accelerators are manufactured over there. What sort of risk lies there right now for the chip sector?
Well, you're right that the AI industry is hugely dependent on Taiwan. It's almost the case that all AI processors are manufactured by TSMC in Taiwan. And this has been one of the reasons why the US, as well as other countries, have been trying to diversify chip supply chain. But right now, the reality is that the manufacturing capabilities of Taiwan's leading chip maker, TSMC, are ahead of competitors. And that's why, whether it's Google, or whether it's Nvidia, companies are turning to TSMC to manufacture their most important AI chips.
What is worse than running out of components is running out of them when every data center and AI lab on the planet is ready to throw money at you. Nvidia's struggle with component shortages is no secret. It's a common theme in a post-pandemic world where chip demand has skyrocketed. But in this case, it's one of the most anticipated tech releases of the decade. In Taiwan's bustling tech factories, the focus has shifted to fast-tracking solutions. Think of it like playing Jenga with silicon wafers and cooling pipes. One wrong move and the whole structure collapses. According to experts, these component shortages could result in a backlog of orders that might stretch into the latter half of 2024. And then there's the liquid cooling fiasco. The next-gen AI servers are designed for unparalleled performance, pushing the limits of computational capacity. However, this performance comes at a cost, keeping the heavy-duty machinery cool. Imagine finding out the fire hydrants around your luxury hotel are spewing water inside the grand ballroom. That's about the scale of Nvidia's leakage issue. Engineers are rushing to reconfigure the setup, with new suppliers stepping up to fill in the gap. Seems like AI isn't the only thing that's overheating at Nvidia's labs these days. Blackwell becomes B200A. Just when you thought component shortages and leakages were bad enough, Nvidia confirms what no one wanted to hear: serious design issues with the Blackwell AI GPU. The company is now pivoting to a new version, dubbed the B200A, to remedy these fatal flaws. Given Nvidia's track record, this course correction, albeit significant, could ultimately fortify their hold over the AI hardware sector. The challenge now is to convert this potential debacle into an opportunity. Thankfully, if there's one thing Nvidia is known for, it's resilience and innovation. Maybe time to reconsider that Blackwell name. It might just be bringing bad luck. Nvidia's close partnership with Foxconn could be the lifeline it desperately needs. While only a limited public version of the GB200 AI servers will be available by the end of the year, it's enough to keep investors on edge. Foxconn's current production dominance ensures that at least a fraction of the market demand will be met, retaining some investor confidence amid the turmoil. As the bulk of the market waits for the complete rollout in 2025, Foxconn's early deliveries could serve as a beta test, refining the servers further before they become mainstream. This strategy could mitigate any future hitches and establish a robust, tried-and-tested product by the time it hits the wider market. But what does all of this mean for the future of Nvidia stock? The answer is simple. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And when it comes to the attempts to reshore some of the chip industry, there was a report in the FT this week that some of the big projects that had been initially sort of greenlit as part of the CHIPS Act or the IRA, that there were some delays or maybe even outright cancellations. I'm just curious of your assessment of those efforts. Obviously, even when they're on time, they're not going to change the industry for quite a while. So I'm curious how you're thinking about that.
Well, I think you're right that these facilities are built over multiple years, and the industry has been building plants now for over half a century. So even if you begin building a series of new plants in the US, it only slowly begins to move the needle when it comes to where the majority of chips are produced. If you look at the plants that are under construction in the US right now, some of them have been delayed, but most of them are on target. And I think we should expect over the next couple of years, as these plants come online, and it always does take a long time to build chip plants, that you're going to see a major increase in capacity to manufacture chips in the United States. There's really no doubt that the CHIPS Act has catalyzed a surge of investment in new facilities like these. And it's around the middle of the decade, next year, into 2026, 2027, when most of these plants will come online.
Chris, great to catch up with you. As always, appreciate it.
Thank you.
Nvidia's stock has experienced slight turbulence. However, for an experienced investor, these momentary dips present themselves as golden opportunities. The demand for advanced AI hardware isn't going anywhere. If anything, it's only set to explode in the forthcoming years. The mishaps with the GB200 AI servers are but temporary roadblocks in a longer, more prosperous journey. Reports suggest that with the launch of the B200A models, and once cooling issues are addressed, Nvidia will resume its dominance, likely exceeding previous market expectations. Analysts predict a significant stock uptick by mid-2024 as the B200A prototypes hit test labs and Foxconn's limited supply begins operations. In short, this is the classic tale of buy the dip. The massive demand for AI servers, combined with Nvidia's ingenuity in overcoming engineering challenges, positions the company for a strong rebound. But what's your take on Nvidia's current roller coaster ride in the stock market? Could these initial setbacks be setting the stage for an even bigger comeback? Let us know your thoughts. As we navigate through Nvidia's present predicament and its potential for future triumphs, one thing remains clear. In the fast-paced world of technology, those who dare to innovate are the ones who set the course, bumps and all. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.